In today's video, I'm going to teach you how to add the Relative Strength Index or RSI to your chart on TradingView and how to use it to enhance your trading strategy. Let's get started. First, open your chart on TradingView. If you're new to TradingView, it's a powerful web-based charting platform that's widely used for analyzing financial markets. Once you have your chart open, direct your attention to the top panel where you'll find the Indicators button, labeled as FX. Click on this button to open the Indicators menu. TradingView offers a wide array of indicators, but today we're focusing on the RSI. Simply type RSI, or Relative Strength Index, into the search bar, and then click to add it to your chart. You'll notice that it usually appears below the price chart. This is where you can start analyzing the RSI to gain insights into market trends. Now, let's dive into the basics of the RSI to understand its function. The RSI is a momentum oscillator that measures the speed and change of price movements. It ranges from 0 to 100 and helps identify overbought or oversold conditions in an asset. A level above 70 suggests that the asset could be overbought, which might serve as a potential sell signal, while a level below 30 suggests that the asset might be oversold, hinting at a potential buy signal. This gives traders a feel for when a market correction might occur. Understanding how to use these overbought and oversold signals can be crucial for your decision-making process. Keep an eye on the RSI. When it crosses above the 70 level, it's wise to be cautious of a possible price reversal or pullback. Conversely, when the RSI crosses below the 30 level, you should watch for potential price bounces or rallies. These levels are not absolute, but rather offer potential opportunities that warrant further analysis. Next, let's talk about identifying RSI divergence, a powerful tool for spotting potential trend reversals. Bullish divergence occurs when the price makes a lower low while the RSI makes a higher low. This can indicate a potential upward reversal. On the flip side, bearish divergence happens when the price makes a higher high, but the RSI makes a lower high, signaling a potential downside reversal. To spot these divergences on TradingView, you can use trend lines on both the price chart and the RSI. Visually inspecting for divergences can provide early signals of a change in trend. Alternatively, TradingView's public library contains custom RSI divergence indicators that can automate this process, saving you time while providing reliable signals. Finally, it's important to combine the RSI with other analytical tools for a more robust trading strategy. Consider using RSI alongside support and resistance levels, moving averages, or volume indicators to strengthen your trading decisions. Remember, it's best not to rely solely on RSI. It should be used as a part of a broader, more comprehensive trading strategy. Thank you for watching, and I hope you feel more confident in integrating RSI into your trading routine. Happy trading!